Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live. Thank you for those that are joining us live on Facebook. I appreciate all those that participate in the show. Just remember, it is a podcast, and for almost 9 years, we've been doing the live radio and then now podcast on a couple different days a week. And typically, if we try to stay back on schedule, Mike and I try to get back in on schedule on Wednesdays, but with good old COVID-19, we're trying to juggle our schedules and do the best we can. So we typically do two Italian guys talking real estate. So we'll try to get that back on schedule as much as we can here, Mike. So welcome back in. How's it going?
Good to be here. It's going good. I got my background going on now.
I know. I'm just talking about, you got a little upgrade there.
Yeah. Rather than my kids' play structure and trees and stuff, I got the Golden Gate right here. So
that's nice. I like that backdrop.
Yeah,
it's good stuff. Very good. So we're going to talk a little bit about the market update. Primarily, most of you follow the show, it's Silicon Valley. We typically address, unless we're doing something different, we talk a little on national levels and data and information. But typically, we try to stick to Silicon Valley because 80 to 85% of our listeners and viewers are really here in Northern California and Silicon Valley. So a lot of changes, a lot of things taking place. So why don't we, maybe Mike, you could start with a little market update, maybe give us an idea of what we're looking at of inventory and kind of the temperature of the market. And then I know we want to talk a little bit about some of the COVID-19 updates, so how as it relates to listings representing buyers. We'll talk a little bit about rates and kind of jump in. So what's happening there in the marketplace?
Yeah, so the inventory is actually held pretty strong. We're at about 1,200 active units with single families, and then bringing in condos and townhouses, we're at probably about 1,500 active units right now. Good. So things are not, it's not that bad. I think we'll start to see, as things ease up a little bit, we'll start to see even more come on in the summer. Mm-hmm. And it's moving along. You can show property, you can pretty much do anything you want right now other than open houses. I imagine open houses will be restricted probably for, at least through the end of the summer, but I'm taking a guess.
Yeah.
It's going to be a while until those come back.
So you think that out of all the, really the changes that took place pre-COVID-19, open houses will probably be the element of real estate that's probably going to still hold off, and they're probably not going to go back to full capacity for a while?
Yeah, I think so. Really, open houses are the one thing we really can't do right now. Outside of that, everything else is kind of back to normal. You can show houses that have people living in them without them being there, of course, or you can show vacant houses. You just have to follow a certain protocol. So everything's pretty much status quo other than not having live open houses, basically.
Yeah, good.
So the way people are doing open houses is through Zoom and through online platforms and virtual and that type of stuff. So it's different, but I know a lot of agents that do. I didn't personally do a ton of open houses myself. I have a team that helps me out with that because I like to spend time with my family on the weekend. I did used to do open houses before I had kids a lot.
You earned your stripes.
Yeah, I earned my stripes, but I know a lot of people that do open houses are kind of enjoying this being more of a Monday through Friday thing now. Know? So
that makes sense.
Yeah,
that's good. So can't do open houses, but if you want to show a house, is it still private showing? And talk a little bit about the paperwork, logistics, maybe what one has to go through to do that.
Yeah, so there's basically every single house that we show now, we have to sign what's called a PEAD form. Okay. And it's a new disclosure that the California Association of Realtors came up with right when shelter in place hit. And you and I were just talking off air. It originally started out as like a 1-page form, and within a matter of 2 months, it's become like an 8-page form. So it's 2 pages of like disclosure that you actually have to sign. And then it's an additional like 6 or 7, I don't know how many pages of actual protocol and advice basically on how to show property, how to disinfect it when you leave, maintain proper distance and wipe down and wear gloves and wear masks and blah, blah, blah. That's typical disclosure, but it is a form that every buyer has to sign before looking at a property, each individual property, or sometimes people are putting multiple addresses on the form. And then as a listing agent, you have to accept these disclosures before giving them the code to get in. So like you're not supposed to allow anyone, or at least if you're with the big broker, they're not allowing any of your listings to be shown without that disclosure being signed. It's all about liability, Joe. You know how it is.
Well, yeah. I mean, I was just thinking about, we're talking about California A, and we're talking about, legalities and let's face it, you and I both know several attorneys, and we tease them all the time. I know I do, Jack. We tease it.
Yeah.
They're just licking their chops right now. Like every situation when you have something like this come up, there's just going to be, unfortunately, right or wrong, there's going to be a lot of lawsuits. People are going to look for opportunities, some legitimately and some not.
Absolutely.
Right?
Yeah. Now, in addition to the original question, what's different? There's also there's COVID contingencies now.
Oh.
And so originally in a contract, there was 3 main contingencies, sometimes 4 with the sale contingency, but you had the investigation, the loan, appraisal, and then sometimes they had to sell a house to buy.
Right.
Now you can add in a COVID contingency, and whether the seller accepts it or not is another story. They don't have to, but it's another contingency layer. And it basically gives the buyer, depending on how you fill out the form, it can give them an out clause if something happens to their job due to COVID forces.
So that's an interesting one. So you're saying that it's there, the form has to be executed, but they could decline. Like for instance, if I'm the buyer, Mike, and you're representing me, and I say, hey, listen, everything's great right now, Mike, but 2 weeks from now, I don't think I'm going to lose my job, but I might lose my job. And so that's one example. So does the seller have to acknowledge that and agree to that, or how does that work?
No, it can be used as a point of negotiation.
Okay.
So this is straight from our in-house counsel's mouth, is that the COVID contingency is a much more beneficial form for the buyer than the seller.
Makes sense.
Yeah. So you don't have to accept it as a seller, but I have to imagine that most buyers that are utilizing that contingency are worried about something. I don't know. I've had some deals through this shelter in place have that in place, and I've had some that they didn't even put it in the offer, and it was fine, and they were fine. And
okay. So obviously some provisions still, but you're showing homes. The inventory is actually pretty good though, right? I mean, it sounds like it's picked up a little bit. If I'm not mistaken, maybe a few months ago, was it well below 1,000 in the Santa Clara County?
It was, and then it's been creeping up little by little as people got a little bit less wigged out, and it's been creeping up, and I imagine it's going to continue that way, especially because we're coming into peak selling season. But I was actually thinking, I don't want to throw you for a curveball, but I can share my screen, Joe. I have a couple.
In my day, Mike, I used to hit a curveball, actually.
Yeah. Did you? Are you sure you didn't strike out?
When I was younger, it's funny, and I'll tell that quick story right now as you're pulling those screen up. Yeah, we could look at some numbers, but I was down in the Central Coast visiting family, and I was going to golf one of the days, and then my nephew and niece said, why don't you come out and take some batting practice and shag some balls with us, hard balls. And I'm like, all right. Actually, I have to say it was really fun, although the next 3 days I was pretty darn sore. But I did pretty good for an old guy.
You got the experience. I bet a lot of people that listen to your podcast don't even know about your background with baseball, do they?
Yeah, I had a short stint playing professional baseball. Never made it to the major leagues, but dabbled a little bit in the minor leagues, and that was in the That was in the early to mid 1980s. Yeah, so that ought to date you a little bit. But
Okay, you dated
yeah,
here.
it's fun. I was actually a little surprised that I held up pretty good. It was pretty fun.
Yeah, well, you can hit curveballs. You can probably throw a curveball. You could do it all. So, no. Do you want me to share? I got some cool charts. Real quick. Do you want me to share that with you, or
Yeah, let me see if we could. Let me see if it. Let me see. Give you the ability to share.
Yeah, I got it. Here we go. Can you see me?
Oh, there you go. Look at that.
So,
I like it.
So this is, and I know people are listening too, so I'll be visual as well. What I like to look at is a couple of things. This one's average days on market and sale to list price ratio. Now, the days on market's a little deceiving because they stopped tracking days on market after shelter in place. It was a rule that went into place to give people some relief on days on market because things weren't being able to be shown for the first couple of weeks, et cetera.
Right.
But you'll notice that sale to list price ratio has stayed above about 100% on average. This is for the entire county and single family. It's gone down since shelter in place in March, you can see, but it's still, it didn't tank or anything like that. It's still
right.
Now, the other one that's interesting is months of inventory. And so what you'll notice is looking to the very right of the chart, we had a dip obviously in March when the shelter in place happened, but it's been slowly creeping up over time. You'll see near the end of the chart.
Right.
And what this means is 2 months of inventory. So what happens is basically what it's saying is if nothing came on the market from today on out, we have 2 months worth of houses to sell. And that got really low back in 18 when we really were the peak. You and I, Joe, talk about when the real peak was.
Right.
You see it there like in May, June, almost near July of 18 was when it was. It was even lower in late December of 18 or 17, but really the peak was in mid 18. So you'll notice it correlates with months of inventory because there's not a lot of inventory for people to look at. And so I think that's those are the two main ones I wanted to share.
Those are good.
And so what I think is important is, what's really been driving the activity is that there still hasn't been a lot of houses to sell.
Right.
Jobs haven't really taken a hit in the Bay Area, and rates have still been good. So, for people that weren't that worried or about the COVID thing or were expecting at some point it to loosen up, they've been out there buying houses. Now, I'm not going to say it's been gangbusters like before. We're not having open houses with 100 people coming through, and you're not typically getting 5 to 10 showings a day in a listing. Maybe you're getting a couple, but it's serious people. There's still multiple offer houses out there, bidding war. There's still, I don't want to call them wars. It's such a bad word but there's still bidding opportunities and stuff like that. So, it is what it is, but it's fine.
It's good to know. Speaking of that, before I talk a little bit about rates, and we'll chat a little bit about how you and I feel, the market environment and take the temperature of buying, selling side, both. But so if you're looking to do a private showing, Mike, do you, how do you determine if someone calls you up or obviously your expertise, someone calls you up and says, hey, I really want to look at that house at 123 Jones Street or whatever. Do you kind of feel them out as a serious buyer, or what if they're just like, oh, I kind of want to take a look and I'm trying to see what's going on in the market? How do you gauge that? Obviously, if there's no open houses, it's not like, I don't think you want to spend your time showing 20 people a house that's really not interested. So how does that work?
I would say with vacant homes, it's you're a little less about vetting the buyers going in and out because it's not really much to me to do that. But as far as homes with sellers living in them and whatnot, it definitely a vetting process. Are they pre-approved? What is their story? You can ask I ask the questions. What type of jobs do they have? What's, are they really serious? What's their background type of thing? Yeah, absolutely. You should vet it out, especially if you have to get your seller to get out of the house and sanitize and that type of stuff. It's an undertaking. And so there's kind of, in my opinion, now there might be different people with different opinions on that.
Mm-hmm.
I think there's two schools of thought from a vacant home versus a occupied home.
Yeah. Okay. Good. Well, I'm going to give a little update on rates. I mean, most people probably know by now. You're hearing it in the news a lot. You're seeing it online just about everywhere. Rates are still near all-time lows. They bounce around a little bit. The thing that I'm going to caution people to be careful about, because it's just a confusing exercise, unfortunately, is that a lot of the rates you see publicized online and what people talk about, of course, because that's to get your attention, the lower the better. But what they don't usually say, unless you read the fine print, is that typically it's for conforming loan amounts that are $510,000 or less. You have to have excellent credit, blah, blah, blah. So just always be sure to look at the disclosures, disclaimers, kind of figure out. They could also be showing a super aggressive rate to get your attention, which it certainly does. And then typically, if that's the case, then it's because they're charging points to drive down that interest rate. So I just always like to talk on these, especially on these shows, to hopefully educate people on, sometimes if it looks too good to be true, that'll say it typically is. And just remember, there's a cost to an interest rate. Every single interest rate, when someone quotes a rate, there's a cost to it. And a lot of people don't look at it that way. And I think it's the best way to look at it in that if someone says, hey, today's a 30-year fix is at 3.25%, so you think, okay, well, what does that mean? Is it what loan amount? Is it a 30-year fix? As I said, okay, we determined that. What kind of credit score does that mean? What kind of loan to value? If it's a purchase, sometimes there's purchase specials. I would just say that what Mike and I always say is, inquire, educate yourself, inform yourself, check with people who know, because it's confusing. It's confusing. But all that said, that was like a 2-minute disclaimer. All that said, the rates are good. And we've been talking about this for the last several months. I know COVID-19 has shaken a lot of people up. It's put a lot of people out of work. And for that, it's really sad. Every day, and you and I talk about this, Mike, and every day, a day doesn't go by, I don't feel grateful enough. I mean, I feel grateful in the fact that we're able to work still. I mean, we have a business. Yeah, it's been changed a little bit. Yeah, we've asked to do some different things. It's become more conservative, but we have a business where people need money still. And so we're fortunate. There's millions of people out of work. And so for that, I'm grateful. And I know you feel the same way, Mike. I mean,
I agree.
I don't know, the last count, I think is like 40 million people on unemployment.
Yeah.
And so it's sad. But the bright side is there are good opportunities right now. I do think still, in my opinion, it's a great buyer's market. It also happens to be a kind of a perfect storm where sellers should be in pretty good position too, because inventory's up, but it's not super high still. So it's a good balance. And the other thing I want to really bring to everyone's attention is when you're getting pre-approved and when you're looking in the marketplace, one of the major things that has changed really in the last 60 days, jumbo financing. A lot of lenders have bailed out. They've temporarily got out of jumbo financing. A lot of your major lenders, even for temporarily shut down refinances. I know Wells Fargo, Chase, B of A for a while. I'm not sure. You have to check. For a while, they were saying we're not doing refinances at all. We just can't handle it because we're dealing with a lot of the forbearances. We're trying to focus on purchases, and we can't do that without handling refinance. So keep an eye on that. Also, a lot of the underwriting guidelines have changed. And so rather than go into all the detail, I would just tell you this, be really careful. If you were even approved 30 days ago, 2 weeks ago, maybe yesterday, things may have changed. Credit score limits are changing, how much you put down. One of the things, Mike, one of the biggest changes is many lenders just 30 days ago, they would allow what's called an 80-10-10, or you could finance up to 90% combined loan to value. That shrunk for the most part now down to 80%. In some cases, you can do 90, but you have to be careful with the loan amounts. Again, rather than go through all the details of all the changes, I would just say this: be very careful who you're getting approved with, and you would be surprised. Some of the major names, Wells Fargo, B of A, Citibank, Chase, are some of the ones that have been the most restrictive in the last 60 days. on non-owners. A lot of them aren't doing non-owners anymore unless it's a conforming loan amount. They're restricting down payments. Anyway, a lot of stuff happening. It's just
what about the cross collateral loans, Joe? Have those dried up for now too, or?
No, they're still available. No, they're still available. We still have some investors are doing them. But just to give those a flavor of New American Funding, we do quite a bit of volume. We do, close these days, close to $2 billion a month. So, anywhere from 14 to 20 plus billion a year. So we do a lot of volume. We do a lot of California business. And we had 11, 12, I think, jumbo investors just 45 to 60 days ago, and we're down to 5. So the good news is we have them. We still, really could satisfy just about any deal, but, that's not the case for everybody. Yeah. And a lot of people have lost the ability to do jumbo financing. The other thing I would add before we shift gears a little bit too is if you're working with a lender and that lender is trying to talk you into doing a first and second, and they say, well, you don't really want a jumbo loan. Let's do a first of 700,000, a second of 200,000, whatever. Be skeptical of that. The reason they're trying to sell you on a first and second is because they probably can't offer jumbo. And don't be afraid of jumbo, even though, believe me, sometimes it's like taking blood. Jumbo financing can get a bit laborious in terms of the conditions. However, jumbo financing, the rates are still very good. In some cases, just as good as conforming. So don't automatically think that it's a negative in terms of rates. Rates are still very good with jumbo. It's just as Mike knows, jumbo financing, unfortunately, it's not as simple as conforming. So you're going to get some additional conditions. They're going to ask, bring your kid in. Let's check the blood of your
your firstborn.
Anyway, just a quick summary. But rates are good. It's just good to be informed and educated. We're big fans of that. And I would say kind of a closeout too, and I'll pass it over to Mike, that it's a great time to buy. I'm seeing a lot more activity in the last 2 weeks with pre-approvals, people getting back on the horse, kind of figuring out they're out in the market, looking at different opportunities. And to some extent, I believe that there's some pent-up demand. This is kind of a, philosophically and maybe psychologically, Mike, this is probably a piece of people trying to get a little bit of their life back to a certain extent too, man. Right?
I would agree. I think especially people need a place to live and they want to invest their money in. There's not much of a better long-term investment than real estate in Silicon Valley or real estate in general. But I mean, Silicon Valley especially. So I would agree with getting a piece of the life back.
Yeah. So, a great time as always. For those that don't follow the show, hopefully if you're new, you're just watching us on Facebook, download the podcast, follow it, let us know what you think. We've been doing this for almost 9 years. Mike's been along helping me with the show side by side as a partner in this for, I think, 7+ years. We do miss the live radio, so maybe one of these days we'll get that back. But
boys are back in town. Boys will be back in town one day.
Yeah, back in town one day, and keep supporting those local businesses too. I know Mike, your family's in the restaurant business. I think things, obviously, thank God they could do takeout and delivery and things like that and to go. But, it's something to keep reminding people too. Try to help your local community. I mean, we try to do as much as we can, go support restaurants and places that have been so good to our communities for years. And I always like to bring that up.
Yeah, thank you. I think restaurants in general, and I mean, it's going to be interesting to see what happens if they're supposed to open things up by Friday.
That's right. Is that indoor and outdoor, or how's that work?
Outside.
Okay.
So for 2 of our 3 stores, it doesn't really mean much. One, and I call it half of one, but for one of them, it's a matter of adding another 10 or 12 seats, or I don't know what it's going to really do. And you really don't know how people are going to react or respond if they're even going to come in, for that. But for the most part, I think restaurants still just need to survive through takeout, to go, and delivery platforms. And, everyone's doing their part to support them in that way. I know a lot of people are doing that like you guys. So I think
it's great.
Restaurateurs are thankful for that.
Well, especially if you're a person that likes food. That's me. So it's a good thing. In some cases, it's a good thing that these podcasts, or not podcast, what is podcast, but the live feed on Facebook, it's like shoulder up, so it's not showing the midsection right now.
That's showing the old gut, the Corona gut, right?
That's right. Well, I want to thank you again for tuning in. Again, typically we do these shows, Tuesday, Wednesday, Thursday. It just depends on everybody's schedule. But just remember, we're here for you in general. And Mike can always remind everyone on the podcast. Again, hard to believe, over 1,700 shows. I think it's nearly, last time I counted, over 700,000 downloads. And so we want to continue to educate and inform the consumer. And that's really the main objective. We want to make sure that when you are educating, informing yourself to make a decision on real estate or financing or whatever it may be around real estate, that we're here to help. And we want to continue that trend. So you can always reach out. For me, of course, you go to RERadiolive.com. You can email Joe at RERadiolive.com, or you can always reach me, 408-838-9060. Mike, how about you? How can they reach out?
You go to my website, MikeDsells.com, or Mike at MikeDsells.com is my email, and 408-630-0101 is my number.
Great.
Thanks for having me on.
Yeah, thanks for connecting, Mike. Have a good rest of the week.
Absolutely. You too.
Yeah. Those out there, thanks again for tuning in on Facebook. Remember, you can always download the podcast. Go to RE Radio Live or Stitcher, iTunes, any of those places. This is Joe Kuchera with Real Estate Radio Live. Thank you again for tuning in today. Until next time, take care. Have a great rest of the afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.